Hey everybody, quick update today. It is Friday, April 9th, 2021. Car prices continuing to surge. More recent news, more recent events in the car manufacturing industry. GM is shutting down more plants. We still have the chip shortage and other supply chain issues, along with records amount of stimulus and people with money now to put more down payments down on cars. Of course, the banks are endlessly liquefied. Endless backing for the banks via the money printers is going to create more and more inflation and rising prices. Recent article today out of CNN: car prices surge as more plants close. GM, they're closing down more car plants because of this chip shortage. General Motors is going to be temporarily shutting down more auto plants, leading to tight inventories at dealerships and higher prices for customers. The company announced it would shut down production at 2 additional U.S. plants, one in Spring Hill, Tennessee, the other in Lansing Delta Township, Michigan. In the coming weeks, GM is also extending shutdowns at the current Fairfax assembly plant, that's in Kansas City, and in the Cami plant in Ontario, Canada. Now, both of those plants have been idle since February 8th, so the pain is continuing as far as the production and worsening with these additional plants now being shut down. Now, they're saying it's temporary. Of course, that's what they said back in February, and we're going over 2 months now, and we're going to see how long this drags out. But it's not looking good for people looking to get a good deal on a car, even used cars. The auctions are seeing a lot more people going into auctions, more dealers, and even more individuals going into the car auctions trying to find a deal on a used car because prices are simply jumping way too fast for so many people. Also, with this shortage and production slowdown, supplies of vehicles at dealerships are getting extremely tight. According to this article, according to industry experts, last week, inventory of vehicles at the end of March was down 18% from the end of 2020. So just in a few months, almost a 20% drop in inventory. And this is starting to look like the housing market, where we have super low, tight inventory and still very strong demand with all the money being pumped out into the economy right now. Now let's take a look at wolfstreet.com real quick here. We're also going to link to this article down below. And he puts it the following way: need a used pickup truck? Forget it. Or pay out of your nose for it. But even spurring mid-sized cars are seeing stunning price increases. Yes, he is calling these stunning price increases, and I agree. Let's take a look at a chart here from this article. Weekly wholesale auction price index up about 20% year over year. Also from this article, the used vehicle value index from Manheim, a never before seen spike in car prices. Remember back when the shutdown began over a year ago now, the shutdown recession, people were saying there's going to be deflation. And I said, be careful, be careful. They can prop this thing up. We could have shortages, supply chain disruptions. We've talked about this several times. And when you look at the lending, the banks again being propped up, all the money being pumped out there, rising prices. So be very, very careful. If you're looking to buy a car, you could be overpaying, especially if the chip shortage gets resolved. But what if it doesn't? What if prices keep going back up? There's no way to tell exactly how to play this, but just use caution. And the biggest price increases have been in pickups. Why are so many people now buying much more than they did before, so many more pickups? Is it because more people are moving? We did have the big city exodus here with all of the events that we saw over the past year. So is it just they need a pickup to move? Are people sleeping in their pickups and their SUVs? We're also seeing big jumps in SUVs, the prices. So you let me know what's happening with that. And also, due to the shortage, the demand for rental cars is up and the inventories are down. So costs for rental cars are rising. Now, remember on YouTube, all the videos where some of the people were showing all these car lots with overflow and excess vehicles, sometimes thousands of cars parked in a lot, and people predicted prices are going to be crashing because there's so much inventory and so much economic devastation that nobody's going to have any money to buy cars. And we said, hold your horses. There's going to be a lot of market propping and backing here, and we look at all the stimulus checks now and the enhanced unemployment benefits, and what are we seeing? We're seeing inflation, and I said beware of inflation. And what are we seeing right now? Inflation or deflation? Well, it's inflation. So what's going to stop? What's going to change the direction of the cost of living right now and the prices, including used car prices? Well, something will have to drastically change in the banking system, right? The banks, if they change the way the banking system works, that could change how money is loaned out. That means no fractional banking. That means the money has to be in the bank for the bank to be able to loan it. And in my opinion, the reserve ratio should be reversed. Right now, the banks can loan out about 20 times of what they have in reserves. So for every $5 million, they can loan out 100 million. I think it should be the opposite. I think for every 100 million that they have in reserves and sitting in deposits, they should only be able to loan out 5 million. That way, if there's defaults or problems with the bank, issues with the bank, then they're going to have plenty to stay solvent, and you won't have to worry about millions of people losing their money that they have deposited because of loose lending and insanity in the bank. Now, while on one hand, I'm sure that most of you that follow this channel are not surprised at all by this. We've been expecting inflation. Don't really know what's going to change this, if there will be a change in the banking system. One thing to remember, endless liquidity for the banks, money created out of thin air in unlimited amounts. They can continue to prop up the lending system. That means even if 90% of the country is in debt and without jobs, they can still loan out money. I know that sounds crazy, but that's the basis. It all goes back to the fiat money system. That is the backbone or the basis of all this price action that we're seeing in the markets, and even the automobile, used car, new car market, the housing market. It all goes back to the fiat money system. But honestly, I don't know if and when any lawmakers are going to change this. It can all be changed at the stroke of a pen. So maybe you let me know, is something going to change? Is there going to be a situation that arises that's going to revamp the entire structure, the monetary system, the lending system, the banking system? Maybe someone out there knows. I don't know, but I do know that we need to prepare for a lot worse things to come here. Rising prices, more job losses, more stress with people getting behind on bills and requiring moratoriums just to keep a roof over their head. Maybe a big surge in homelessness, but either way, the working class is going to have a tougher and tougher time with these rising prices. And we saw another absolute devastating job number come out. We're going to talk about that in our next report. This report, we wanted to kind of focus on the car market and what's happening. Thanks everybody for being here, for your support. Stay well, stay safe, stay prepared, everybody. Bye for now. Peace.